also under IFRS 16, contract assets. So let's see what's happening there. The contract asset is comprised of contract costs incurred at 31st March 2016 of 15 million less a payment of 10 million from the customer. So you go back to the trial balance and you realize that there is a contract asset of 5,000 here. So this 5,000 here was because of the cost that they incur of 15 million and the amount they receive from the customer, 10 million. But let's see the breakdown of the contract. The agreed transaction price of the contract is 30 million and the total costs are 24 million. Darling Co. uses an output method input method based on costs incurred to date relative to the total expected cost to determine the progress towards completion of each work. Okay, now when it comes to construction contract, this is also under IFRS 15. Remember, I told you that IFRS 15 came to replace two standards. That is IAS 10 and then IAS 18. The construction contract aspect IAS 10 is the note 2. The IAS 18 aspect is this one. So when there is a construction contract and you need to find the figure for the contract asset or liability, this is what you do. You're going to be bringing first what we call the cost incurred to date. Then you're going to be bringing what we call recognized profit or loss. If it is a profit, you add. If it was a loss, or it's a loss, you subtract. Then you're going to be looking at the amount receivable from your customer or from your your customer. So that is the invoice. That will be less. And the balancing figure is what gives you what? The contract asset. So what the company has done by deducting the amount they receive from the customer from the cost they incur as contract assets is wrong. So we must do what? The right thing. So how do we go about it? The first thing we need to is to determine whether we are making profit or loss on the contract. So note 2. So what is the contract price? What is the contract price? 30,000. And what is the cost to completion? So total estimated cost? 24. So on this contract, the company expects to make a profit of 6,000. So this is the estimated profit they are making. But we are told that it is the company's policy that they will allocate profit or progress of completion using the input method. So for us to get the percentage of completion, it will be cost incurred to date divided by total contract cost times 100. So what is the cost incurred to date? Cost incurred to date from the question. So 15,000, but we are incurring a total cost of 24,000 times 100. What do I have? That gives us the percentage of completion. Less speech payments. When you are calculating percentage of completion, do you get that this is the formula?
This is the input or output?
This is the input method. When they say we should do input. So with the input method, you look at the cost incurred to date over total cost. If they are using the output method, that would have been the work certified work certified, okay, divided by contract price times 100. But in this question, for us to determine the percentage of completion, they said we should use the input method. So that would be cost incurred today divided by total cost. So your question of less payments, why will it come in? Here. Because we say cost incurred to date. What is the cost incurred to date? 15,000. So you don't less anything. Then the total cost or total contract cost is what? 24,000. So what percentage do we have? Okay.
The output method is what is specified to date.
Yeah.
Over
Contract price.
I don't think that contract revenue.
It's the same thing. Yes. Total contract revenue and the contract price is the same thing. It's the same thing. So if you check your notes, we made a reference to these things.
On the input method.
Yeah.
It's cost incurred to date over total estimated.
Yes. So it's the same as total contract cost. Do you get the idea? It's just about wordings. Where did you get it from?
The video.
Okay. Yeah, total expected cost. So what would I have for percentage of completion?
62.5%.
62.5. Now follow me closely. Percentage of completion will be calculated. Now once you calculate your percentage of completion, that is what you will use to allocate revenue. That is what you will use to allocate profit. So if we are preparing an income statement extract for this question, then our revenue will be 62.5% of the transaction cost, which is how much? 30,000. So what do I have?
This is
18,750. Then my recognized profit, look at it. The total profit we are making on the project is what? 6,000. How many percentage of the project are we done with? 62.5. So for this year ended, we will recognize only what? 62.5 of that profit. So what do we have? 3,750. The balancing figure is what is supposed to go to cost of sales. Or we can call it cost, and that should be 15,000, I guess. And that was the cost they incurred to date. So that is the idea. Meaning that if you now go to the revenue for the company, this figure will be added to what? Revenue. Because they have not recognized the revenue on the contract yet. So this figure will be added to their revenue for the financial statement. But then, we need to calculate the balance on the contract asset account. Because remember, what I told you they did in the trial balance is wrong. They have 5,000 there is wrong. So this is our pro forma. Cost incurred to date, recognized profit, we less what? The amount receivable, then we get a contract asset. So let's see what we got. So what is our cost incurred to date? 15,000. Recognized profit is how much? 3,750. Receivables. How much did we receive from the customer during the year? 10 million. So 10,000. We less that. And the balancing figure is what gives us the contract assets. And that will go to our balance sheet. And what do I get for that? Having 8750, I guess. Yes. So that's contract assets. That is contract asset. Assuming this figure was negative, it would have been a contract what? Liability. So that is the idea about dealing with this. That's the idea. So the objective of this question, as I mentioned, is not just necessarily preparing the income statement, preparing the balance sheet, but understanding the treatment. The first scenario was revenue, what you know already. The second scenario is about when a contract has stages for completion. So that is the idea about that. Now, for me to stay